All right. Good morning, everybody. Happy Wednesday. It's Hump Day here on the morning show. Spencer Israel, Steve Strazza, Alfonso de Pablos with you uh, on this fine Wednesday morning. What are we going to talk about today? Let's see. We are going to talk about this quote epic losing streak in the Dow. That's what I saw. That's what the headline said. They said it's epic. Is it epic? Down 3%? That's what JC would say if he were here. 9 straight down days, whatever. So we'll talk about that. What else? We will talk about things that interest me, which is you saw the headline yesterday, this Honda Nissan merger. That's interesting. We'll talk about that. I want to talk about Bitcoin ETFs for a second because I saw this stat from Louis this morning that the AUM in the Bitcoin ETFs just surpassed AUM in the gold ETFs, and it took what 7 months, 8 months for that to happen. Just crazy stuff. So we'll talk about that. We'll talk about a lot of ETFs today because our guest, new guest, Dave Mazza, he's the CEO of Roundhill Investments, and they've got some pretty interesting things. They've got the Mag 7, which we've talked about on the show previously. They've got a zero DTE covered call ETF. They've got a metaverse ETF. They've got a Bitcoin covered call ETF and an Ethereum covered call ETF. They've got a GLP-1 ETF. A lot of interesting strategies. We will be sure to talk about the ones that interest us the most and the ones that interest the market the most. And that'll be at 9. We'll have Kenny on as well. We'll have Mary on as well. And that is the move. What's going on in the chat? Everyone off to having a good day so far? What do we got here? Talking about, yes, there was a CMT event last night. I missed it, but I heard about it. Speaking of events or CMT events in New York, we will be in New York. Our team will be in New York end of January. You've probably gotten an email about it, but if you haven't, you can go to portfolioaccelerator.com and you can apply and come hang out with us for a couple days. This is the 28th through the 30th, right? That's the last week of January. So that's when we'll be there. We'll be there for 2 whole days. The whole team, JC, Strazza, myself, Alfonso, everybody. And yeah, come hang out for a couple days with us in January. Okay. I shall bring Steve on. Wait, what else is going on in the chat? Hold on. Before I bring Steve on. Sorry, Steve. What am I missing? Anything good over here? Rachel is asking how the fart coin is doing. Let's check on the meme coin portfolio. Fart coin is single-handedly propping up meme coin portfolio right now. It's not looking good for me for the Flog and the Luigi and the LGTB, but I got that fart coin, so we're looking all right there. The rest of it is not looking good at all. So AI 16Z is okay, I guess, but haven't bought a meme coin in like 3 days now, so maybe today is the day for me. We'll see. All right. Yes, we do. Oh, we do have a Fed today. That's right. We do have an FOMC at 2:00. We're not gonna go live or anything or that. I don't think we need to. Right? They're gonna hike a quarter point, and that'll be that. Right? So market pretty much sees that one coming. So I don't know what we need to. I don't even think it's important, honestly. I mean, it's important, but it's not like actionable. Is kind of where I'm at on that. Okay. Here we go. Smash the like, and let's go. My intro. Oh wait, Steve. I just lost Steve. First off, second thing, I did say hike. You're right. I always do that. I always say hike when I mean cut, and I say cut when I mean hike. I don't know why I do that. I apologize. You're right. Red cut. They were hiking. It was insane. We were here for it, and now they're going to cut for. So it'll be like the third cut, right? Even though it's kind of like the second cut, right? Because they do quarter point and half point last time. But anyway, I just lost Steve. I don't know where he is. So Steve, if you can hear me, come back. I miss you. I need you because otherwise it's just me. And I got Alfonso here lurking backstage. But I don't know where Steve went just now. So let's just all hang out and sing Kumbaya and talk about things, right? Because you guys aren't here for me, obviously. I'm not even here for me. I'm here for Steve and for JC when he's back and for our guests. That's why I'm here. So I'm here to learn just like y'all. Um, so that being said, let's run through some overnight markets and I'll kind of kill some time until Steve gets back here. We're in the green, looking good. Futures, S&P, Nasdaq, Russell, Dow, all in the green. Oil looking good. Gold, all that flat, right? Crypto in the red this morning. Bitcoin, ETH, dollar up, bonds down. Europe up. Asia mixed, right? Hong Kong up, Japan down. What else do we got here? No, that's kind of it from an overnight futures perspective. I don't spend as much time looking at the overnight futures as I used to. I mostly just look at the ETFs now, but of course they're not liquid or not trading at this time of day. Um, so yeah, I guess I don't even know if I have a take on all of that action, other than to say I've been keeping an eye on Europe these past couple weeks. I've been watching the FTSE. I've been watching the DAX. They've been trading really, really. Um, I guess the FTSE more so, really, really condensed, getting tight in this range, and I find that interesting. I've been watching what's happening in South America. This massive divergence between Argentina and Brazil. I mentioned that yesterday. So some interesting things happening in global markets. We spend most of our time talking about the U.S. because U.S. is the best, right? We know this. It's been the best for what I guess since the great financial crisis. But you know, I feel like I'm reading more and more things about how there are opportunities outside the US. And so I'm sort of that's kind of where my attention has been in my own time doing my own research, looking at what's happening in Europe and South America and Asia. Because I'm probably like y'all, we are all probably way too underexposed to global markets. I think I probably have zero exposure actually to any global specific market. That should probably change, right? So anyway, um, yes, that's right. This is the Spencer show. That's what's going on. We don't have do we even have a slide two? I don't even think we have a slide two yet. Our slide two right now is no, we don't. Oh yes, we do. It's the slide two is the Dow. You want to just bring the Dow up, Fonz? You want to just talk about this? So the data that I saw was this is the longest losing streak since 1978. I think Fonz said he saw 1980. What do you say? 82. I saw 78. Do we care though? Like, do we actually care about this? It's we have fallen. We've crashed all the way down to where we were about 4 weeks ago, right? So we just gave up a whopping 4 weeks of gains. Whoop de freaking do. Um, I don't know, chat. What do you think? To me, this is a nothing burger. I guess it's interesting, but like we shouldn't care, right? That we're down 9 days in a row. I literally saw a thing this morning, that it was on this day. What was it? On this day in 1899, the Dow Jones plunged 8.7% on news of heavy casualties in the war against rebels in the Philippines. So the Dow fell almost 9% in one day. And that was 100 years ago. And now we're talking about a 3% decline over the course of 9 days. I don't think this matters at all. Is sort of where my head is at. It's interesting, but it is great fodder for headlines. Great fodder. Epic losing streak. First time in 50 years. Yada yada yada. But don't even. I was just telling the fans too. I don't even keep the Dow up on my screen. I look at the Nasdaq, the Russell, and the S&P as far as stock indexes go. I have to like search for the Dow, to bring it up. That's how little I look at it, right? So I don't know. Chat, is this interesting? Yes or no? Should we care about this? Let's crowdsource this. Do we care about the Dow Jones 9-day losing streak? I say no, we don't care. And if I can speak for JC, I'm gonna do it anyway, whether or not he likes it. he doesn't care either. That's what I'm going to say for him. I could be wrong, but that's what I'm saying. So, a loss for this long season. What are we talking about here? Yeah, there we go, Harminder. Um, Jeff Weiss, not Jeff Weiss, Jeff Hirsch coming in from the top rope. More often than not, markets are higher. That's great, right? Okay, cool. People don't care. Great. Then I'm in the right. We're all in the right. Confirmation bias for the win. Let's go. We don't care. I mean, we care in the sense that it's like, yeah, headline, but we don't actually care for. It's not actionable information, which I am all about. Okay, Steve is here. So he said he'll be right in. So before that, I just want to mention, shout out to Steve. Those of you in the breakout multiplier strategy, whatever you want to call that, people who get breakout multiplier from us, Steve sent a great note last night about managing a massive winner. They've had these call options in Soundhound for a little while now, and it's been like a 20 bagger for him. And he wrote a very nice, thoughtful note about why he is closing his position in Soundhound. It's been a huge gainer. It's been the biggest gainer that the strategy has had since we started doing it. Sorry, did I say 20x? I'm being corrected now in the chat. 40x. This was a 40 bagger. And he talked through the thought process and the psychology of closing a position like that when you're up so much money. It was a great note. If you are not in breakout multiplier, you should be. It's a bull market strategy for a bull market that we're in right now. Just go to breakoutmultiplier.com. Also, programming note for all you people in breakout multiplier. I know the email last night mentioned this, but 2:30 today Eastern time, Steve is doing the very first breakout multiplier mastermind. He's going to go live, answer some FAQs, talk about kind of the basics of the strategy. This is just for members of breakout multiplier. That's this afternoon at 2:30. Everyone that is a member already has the link. If you're not, again, breakoutmultiplier.com. Get it. Now, that being said, I have Steve here. Are we ready? Yes, we're here. Boom. There he is.
I heard my name.
You've been summoned.
You like my note, huh?
It was you said I'm going to write something quick. It was 700 words.
It changed as I was
It
going.
was 700 words. That's not quick, man. That's a lot.
It's an important story to tell. You know?
Well, it was a lot of words. I liked them, but it was more words than I was expecting. I thought it would be like
I even made an Excel table to go with it.
Yep.
Yeah. No, because I have the mastermind in mind.
Yep.
So kind of planning for that. And it's important that we teach, the way to use the system most effectively, right? Because there is some nuance. And there are some things that go on when you're managing out of big winners like this that are important to keep in mind. And we'll go over all of that stuff over the course of the next few weeks. So
it's probably the hardest thing and the thing I am worst at is managing a winner.
Yeah.
I've never been good at that.
And
right?
it's a fine line too, right? Because with this, Spencer, we tell them, let them run, let the winners ride, but then also, there has to be some level of discipline that goes with it as well.
Yeah. I mean, I'm sort of stuck in Meta right now. I bought Meta, JC or you or someone was talking about Meta a year ago, and I was like, great, I'll buy this for a quick trade. That was 14 months ago. I don't know what to do.
Hey, it's nice when they work that way.
It is nice, but I've sort of been just kind of letting it ride the entire time. I don't know.
Hey, it sounds like a bull market problem to me, Spencer.
Bull market problem, ain't no doubt about that. But managing winners is not so easy. It's like, first world problems. Yeah, it's a first world problem, but like it's still a problem. You know what I mean? It's still hard. So
I heard Josh and Michael last night, Trump and Dad. They're too much, those two. They're too funny. Love those guys.
All right, Steve, what's on your mind this morning?
What's on my mind?
Besides
it's the semiconductor trade. There was some weakness in the cryptos overnight. That has my attention.
Steve, do you care about this Dow Jones losing streak? The chat does not care, nor do I.
You want to see exactly how bad it is? Let me see.
Yeah,
let's put it in context, right? What is it?
Yeah.
8 days, 9 days? Let me see.
9 days.
9 days. All right. So,
but it's been 50 years. 50 years.
Is that true?
Yeah.
Holy shit. It's the worst. Yeah, it's the worst streak in the entire data set. So if I go back, so if I just go back through the past, say 20 years, and we look at occurrences of 8 days or more, because this is the only 9-day losing streak now, 8 days or more, happened in June of 2006, 8 down days. It happened again in July of 2011. And that was the double dip recession fears there. It happened another 7 years later in June of 2018. That was before
June of
bear
18.
market of 2018.
June of 18. Was that when I think Goldman came out with a note that was like, we're bearish on technology stocks. And then the market like shit the bed for like a month. So like,
Spencer, if you're asking me to remember a
I
specific
think that's what it
I
was. I
know.
think that's what it was. I'm pretty sure.
Yeah,
Pretty
maybe.
sure.
2018 was a bad year for risk assets. It was a really bad year for commodities, cyclical stuff. It was a tough year for international. 2018 was when we crashed into Christmas and then reversed it.
Oh, that was the Q4 thing. Yeah, right. Okay. Yeah. That was tough.
Okay. So how much do you weigh something like that? Probably not much. Is it strange to occur right in the middle of a bull market? This kind of a bull market, like an up leg or an expansion phase in a bull market? It's strange. It's really strange. That's all
It
I
does
got.
seem like every day there's another arrow in the quiver for people questioning the bull market, right? Every day there's something
Good.
new.
You
Something
need
new
those
comes
people.
up.
You need those people. We love those people.
Oh no, I'm not saying bears. I'm saying people who are like watching for the turn. People like Grant, for example, right? Who are like have their ear to the ground, literally have their smell on the sidewalk, right?
Uh, ca- Catching the top is sexy, right?
Grant has his ear and nose to the ground
Well,
simultaneously,
well, I'll
right?
tell you why. Well, I'll
That's
tell
cool.
you why that makes sense for Grant specifically. He's not just our stats guy or our quant, but he's our breath guy these
Yeah.
days, right? And the way that breath analysis works is you get the initiation thrust, right? So you get the bull market signal, the green light, and then after that, breath is like sentiment. There's very little to do in between, right? Signals. So then the next signal you typically get in a breath regime is like a fall day. It's a warning sign. It's like a shot across the bow of trouble to come, right? So Grant is looking, hardcore for that right now, because that kind of signal, if you can identify it and identify it accurately and in a timely manner, you can catch the top, right, and get out of the way. So that's the whole idea. You really get these two signals from breath each cycle. We got the really good one, and now he's kind of got his ear to the ground
Yeah.
for that fall day.
Yeah.
Sentiment analysis is similar in that way.
Yeah, can I tell you about the shower thought I had today? The
Yeah,
shower
talk to
thought
me
I
about your
had
shower.
was I was thinking about like fundamental analysis,
Yeah.
and it, this thought occurred to me. It's really most applicable in a bear market, or most useful in a bear market, right? Because I was thinking about all these stocks that were left for dead a couple years ago
Yeah.
that have doubled or tripled or quadrupled,
Yeah.
right? Um, in the last whatever year and a half.
Yeah.
Um, and I was thinking, man, it would have been nice to, if I was, a fundamental analyst, that would have been the time to like do my homework.
They're all bearish. But yes,
Well, but
100%. That's when you went
no,
fishing. What?
yeah, I don't think they're all bearish,
They
right? I
were.
think like that would have been the time to like say, okay, like the fundamental part of this business is so strong. I'm going to buy this stock, and I might have to suck it up for a little while. But anyway, that's what I was thinking about. I was thinking fundamental analysis really most applicable in a bear market. That was my thought.
Maybe most valuable. You can get the best deals, I think is what you're
Yeah,
saying, right? Because
yeah,
we're not in a reversion to the mean business. We're in a reversion beyond the mean business. So what ends up happening is these stocks get killed way more than they should. And they actually
sure,
do end up being cheap. And you can find some diamonds in the rough. We were looking at stocks like Palantir and Uber and Coinbase and Shopify, like really solid businesses, great businesses that were just decimated.
Yeah.
And their multiples were, way down at historic lows. And you could probably look back now as a fundamental analyst and say, oh, and hindsight bias will drive you crazy because they're probably pretty obvious.
No, of course. I know. But also that's what I do. It's what we do. It's what I do.
It
all
was a
right.
generational buying opportunity.
In some
2021,
things,
2022 bear market. The
for
speculative growth
every
stocks.
Uber, for every Palantir, or not, maybe not. Yeah, Uber, for every
For every Uber,
Palantir,
there's a Lyft.
for every Palantir, there's a Zoom, right? Right?
Hey, Zoom's doing well these days. Leave them alone.
I mean, sure. Yeah, it's doing better than it was, but
You know what's still holding up? Like
it's still
literally,
on the mat, right?
you know what stocks are still? What theme is still trending stronger than anything? Stronger than the Mag Sevens?
Yeah, what do you got?
Speculative growth. Market turned yesterday, and look at ARK stocks. Like they held up better than anything. The appetite for the most offensive stocks in the market remains. Ask Sam and Kenny about quantum computing and these hot runners every day. Still going on. Hasn't stopped. Even through the month of December, right? Something like the Dow or the equal weight S&P 500 down literally every day this month. Speculative growth stocks are absolutely rocking. They keep breaking out. They look great.
As usual, it kind of depends, right?
I think investors are feeling spicy in the year end. Caleb wants to shout out cybersecurity. Hell yeah, sure.
Dude,
But it's tech. It's tech, and it's not just the big boys, right? The little boys are doing great out here.
Palo Alto,
Payments,
good.
Sure. FinTech, baby. FinTech, so good. Biotech's trying to get back in gear here.
FinTech, yeah, the ARKF. I see you, SoFi. I see you.
Just look at all the ARK funds, though, right? They didn't get the correction memo this month. Is what I'm saying. Small caps don't look that way. So.
No, but that's been the story though.
Okilo. Shout out Okilo. We wanted to talk about 3D printing the other day. Never really got the chance. Maybe we'll do that later today. You bring Kenny on?
Yeah, Kenny, are you here? Kenny's here, right? Pretty sure. All right.
It's been a long time coming. They ain't come from my club, they tug it. Putting up numbers, 99 pounds, and I still kept it 100. Hola.
Yeah.
Hey, Kenny, what's going on?
What up, homie?
What's up?
We're just cleaning out the drawers. You guys ready? Listen, not only do I give good, great, amazing stock picks, but if you are a member of the room, it's free iTunes cards today. And if anybody's interested, CBD oils for all of your CBD needs. Just a drop you under the tongue. People send me all these presents, and I've got like 90 of these now. So if anybody wants them, we're playing Kenny Good Trivia.
No. Go back to the Apple thing. Wait, what is that?
iTunes cards. This thing still a thing? iTunes cards?
Dude, do you remember when those were a thing?
Like 20 years ago? Still? I still think they have some value. I think they're $10 cards. I don't know. I've got about 20 of these, so I'm going to start giving them out over the next couple of days to everybody. So if you can guess where the QQQ will close today, $10 gift card to you without going over.
All right. So Price is Right rules on the QQQ.
Yeah.
Okay.
So I mean, it's just it's incredible. Yesterday we were talking about call spreads, and you got a little bored with me. I guess I wasn't giving you stocks that were up.
No, I didn't get bored.
You were like, call spreads, Kenny. What are you talking about? But I just want to let you know that they all backfired in a way, because some of these stocks, these rigatonis and these quantum stocks, some of them that had options, right? We started doing like 3-6 call spreads where we were risking 30 cents to maybe make $2.
Yeah.
And the stocks are $18, $19 now. So even when the call spread works, you feel like you've done something wrong because you're getting called away at such these low prices. But incredible action. Actually, the last couple of days we've shorted some of these quantum stocks and survived. So, they're starting to break away from each other. So some of them are going down, some of them are staying unusually strong. But there's always another name. Did you see what Nook did yesterday? We did it all for the Nookie.
Well, I saw it in your email. I saw the Nook in your email from this morning.
It's unbelievable how there's 3 of these every day, and it is a little weird how I picked the one that seems to be the hottest one, because a lot of them they pump and they dump in the pre-market and they just go away. They're done for the day. but it's
So this is NUKK Nucleus Rockets. Nucleus is spelled obviously NUKKLEUS. That's how you spell
yeah,
nucleus.
we were putting on some jam on it yesterday. Whatever that was, the Nucleus song. Dum 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 dum. But now, more importantly, is we've been talking about platforms. You know, we're going to have Trade Zero on. Some of these, or most of them, are eventually going to be great shorts. So a stock like Nucky today, I'm short, you know, but you have to borrow the stock. So the good platforms, if you don't know, it's called a locate or a borrow. You want to short these stocks, they're not easy to borrow. You just can't do it on E-Trade. You have to pay up. In this case, it cost us $9. So you have access to the 1,000 shares to short. So now you could hit the bid and short it at will. And so far, so good on the Nookie. Now, again, this stock yesterday looked like a good short, got halted on the downside, opens up and rallied 9 points. They're very dangerous stocks. You better have a
That's
good
so
platform.
difficult.
Yeah,
That's scary.
yeah. So pretty crazy. But the space rockets robots trade continues to work. RCAT back in play. You had some volatility there, and then as soon as we got done talking about SIDU, they announced an offering. Now I want to show you just one chart this morning, and I'll be on my way. This was one of those moments where if you don't believe in the market being rigged, I don't know what more else I could tell you. So here is SIDU yesterday, right? So let me show you. Obviously, coming out of the Andy Dufresne.
What is this? This is not Andy Dufresne. Andy Dufresne has to show some life, right?
Yeah, well, here if you stretch it out, yeah, once they start doing 9 different reverse splits, it starts to break the chart.
Come on, that's more like that's more like red.
Here's what I wanted to show you. The stock had been, woken up for about 2 or 3 days. So here's this red candle where they did their offering, and usually that's the scam, or if you want to call it the shenanigans. Stock makes a monstrous move. They take that opportunity to do the offering that dilutes the shares. The stock dies. In this case, it was just almost like it was pre-programmed. They announced the offering, and all the stock did was go back to prior day VWAP and provide the faux show bro. So we went from thinking, all right, this one's over with, and 15 minutes later, we're buying it over the VWAP and breaking new highs, and look at this monstrous spike. So again, you just don't know what these stocks are going to do anymore. That's why I keep them all on the watch list, and when they do the chart pattern that I love so much, I get involved. So, again, his stock, this is the one I'm short right now. This is NUKK. Probably not going to stay short too much longer because it's now back to the prior spot where I thought it could get to. We're here and we're covering some. So now if it holds here and starts to rally, we'll get no problem trying to buy this one again because it's been as high as $24 in the pre-market. If you get over the 1750 and then, let alone back over that 19 and a quarter, you're probably on your way to another squeeze. But right now, we're doing our best trying to stay short, covered most of it right here, because when it gets to the target, you got to do something like cover. And again, very dangerous. This one's a little bit different than the rest. But other than that, take a look at SIDU, and a little lesser known one. This is RR, another robotics stock that sprung to life yesterday. Again, it was $1. Now it's $1.60. They will be
I'm afraid to know what these market caps are.
Yeah, but here's
I don't know.
Here's what most people do know. This one, VRAR. This is again, we have the quantum stocks, we've got the robots, we've got the space trade, and then Mobileye and VRAR woke up. Those are the LiDAR stocks. So everybody's getting their turn in the sun, and this is just another monstrous move. This stock was 70 cents. They actually have options on it. So now that it made this move to 250, once again, I'm looking to see if I can catch it on the downside for a short. I'm not in the position right now, but just crazy percentage gains all over the place. And I'm just going to keep looking in my dumpster for some new names. Soon we're going to be talking about Blockbuster again. That's where we're at.
I don't think we'll get that far.
Isn't there like it's apparently every once in a while they talk about Blockbuster stock. It's somewhere deep in the pink sheets. It springs to life every once in a while as like a goof. That's the kind of environment we're in right now.
Anyway, guys, listen. Kenny is trading and making money on these names, like he just talked about, every single day in his room. If you're not in his room, I would implore you at the very least, at the bare minimum, to check it out.
Come on in.
Because there is a risk-free trial for all. So hit thebid.com, and you can see how he trades using those VWAP indicators. Doesn't matter if the market's going up or down. It works pretty much in every environment, and that's what he does. So it
Yeah,
works.
it's the casino is just rip roaring, and we're giving away free presents today on the
Oh, that's right. Free presents.
free presents, CBD oil and iTunes cards. And soon we got, again, I know I've given one away, but I've got iPads. That's right. I got iPads. Who gives away
Beautiful.
iPads? So I
Right.
got 2 more to give away. All right. Merry Christmas, Happy
right.
New Year, all that
See you,
stuff.
Kenny. See you tomorrow. All right. Let's bring on our guest today, our future guest, Dave Mazza. Dave is the CEO of Roundhill Investments, and I was kind of giving the rundown off the top of the show. They've got some very interesting things. I do want to start talking about the Mag 7 ETF, and then we'll kind of see where the conversation takes us, Steve. But you have questions as well, so let's just bring them on, I guess. Let's just do it. Yeah.
Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
Hey, Dave.
Hey. What's up, Dave? Wait.
Do we have audio on, Dave?
Dave? Uh-oh. Dave, can you hear us?
Can you hear me?
Yes, you're a little choppy, but we can hear you.
Okay.
All right. I think let's see how this goes.
So, Dave, let's just start with the question on everyone's mind. When is Roundhill launching a space quantum robot fund?
Oh man, that's a good question. We do not have an imminent plan for that, but we have been talking about it pretty consistently. It's a space that certainly had some interest. I'd say really at this point a few years ago, and now they've come back pretty hard. So certainly could be a good opportunity, especially if there was a leverage version.
And that would be a big hit in today's market, because I don't know if anything's trending the way these groups are. But jokes aside, I mean, how does that go? At an asset manager, an ETF manager, how are you guys thinking about these things? Like, where are you getting your ideas? Should I text you when I come up with a good idea? Like, do you guys have meetings about this stuff? Are you tracking, industry groups that are performing the best? And then if you could address just like liquidity concerns, right? Because you can't just take any basket of stocks and build an index and an ETF around it. Sometimes the aggregate market caps of some of these theme groups just isn't there, right? There's just not enough.
Yeah, that's 100% the point. So to answer your first question, we take a mosaic approach to product development. So we're not beholden to committees at Roundhill. We are incredibly nimble. That's one of the reasons why we've had so much success this year.
Awesome.
We're willing to construct products like the Magnificent Seven and China Dragons that have never been done before, these concentrated baskets. And so, if you have ideas, and this goes to anyone on listening today, it's info@roundhillinvestments.com. So some of our best ideas come from the, I'd say, the community at large. And then we go back and put our lab coats on and do the work, because your point's a really good one. Look, some of those ideas Kenny was talking about before I was getting on make a ton of sense sort of in the single stock space. Putting a basket of securities together with, I'd say that for stocks that trade below $1 probably isn't really going to fly to make that work as an investable basket. But I certainly think the sophistication, particularly of the, and this maybe is jumping into the weeds a little bit, of the market making community for ETFs has increased, so they can handle. I think historically people would never go below 250 million of ADV. Now it's 100, and you could maybe even see that going lower. But you do need to have ensure that you're going to have the liquidity to be able to trade that portfolio.
And what in particular has changed? Are you basically saying a fund can survive with a lower AUM these days easier? Like 100 is like the lower bar kind of, instead of
when I was using those, I was more talking about the ADV in the basket, right? So the securities of the portfolio there. But to answer that question, I think so I have sort of a when you launch a product, you never want to launch it so it's going to close in 3 months, right, or a year. But I think firms have at large have sort of come to the realization that particularly if you have sort of a robust lineup of capacity in your ETFs, you can probably have ETFs that don't trade as well for some time because there may be an opportunity for them.
Well, I'm sure it's hard at times for you guys to make the determination, is this trend a fad or is it going to be a mega trend?
I was going to ask that.
Yeah. Like, how do you tell in the moment? It's easy to tell looking back sometimes, but how do you guys do? How do you work around that?
Yeah, I wish I'd say we have a sort of a magic 8 ball to make those determinations, right? Look, there are a few. I'd say there's a few sort of themes that sort of have been in market for some time, right? That have a lot of longevity. Doesn't mean they're always going to be outperforming, or maybe are even good trades or investments, right? So EVs, right? Cyber, autonomous vehicles, gene editing, right? So these are mega themes that aren't really going away. I'd say anytime soon. But some of the more nuanced themes, and maybe quantum is one of them, they sort of have these episodic turns of performance. And so it's hard to say, hey, is this really legitimate, or is it simply because of actually Alphabet's announcement, which is now boosting stocks, which may actually not, the names themselves may actually not be going concerns in a few years, but you get sort of that halo effect.
Yep.
Dave, what is your opinion on the proliferation of leveraged instruments the past year or two, right? You're obviously no stranger to that, but it seemed like for a very long time there, if you wanted a leverage ETF or ETN, whatever, there were two places you go. You go direction, you go to ProShares. And the strategies were somewhat basic, right? There were sector specific, industry specific, and not too much more than that. And obviously the roof has been blown off the past year, right? So, and you guys have a few as well. What is your take on just the sheer amount of leveraged ETFs there are out there?
So I'd say on one hand, I think it's great, right? So I think, as you know, Spencer, I was involved with some of the first single stock ETFs that ever came to market.
Yep.
When I was running product at Direction, TSLL and others, which have gone on to be incredibly successful products. It's interesting that for years, I'd say the leverage and inverse space was really just I'd say kind of a captive ecosystem, right? There was primarily retail traders or swing traders who focused on these ETFs in their lineup, had strategies for them, really knew how to use the long and the short side. But then when single stock ETFs came along, I think that's actually opened up the space of users, which has been great. So we have more and more people who are looking at single stock ETFs. I think in some cases, we're kind of seeing the limits of that from a plumbing standpoint. There's probably a conversation for a later day, but there's been a lot of chatter about sort of the performance of the MicroStrategy single stock ETFs and the ability actually to kind of make those work in the ETF wrapper with the capacity that occurs on the swap side, and then some of the imperfections that occur with options. But I think we're going to keep seeing more, right? The ETF industry is pretty attuned to where money is in motion. And that's certainly a place that doesn't seem to be going away anytime soon.
And who's your guys' main regulator, Dave? Is it mostly the SEC that you're working with and looking for approval from?
Yeah. So for when it comes really to get an ETF launch, it's primarily the SEC. When it comes to marketing side, there's organizations like FINRA involved, and unless you're using futures contracts or things like that, you're really in SEC domain.
And if you're hitting futures, you're CFTC too.
Correct.
So is there any political situation there with the new administration coming in? Are things getting easier, worse, no difference? Like, where's your head at with the new administration, new SEC chair then?
Well, I think certainly the industry. What I would say to that, the industry hasn't waited, right? So there's been a lot of focus on, well, this new administration is going to open up the floodgates of ETFs. I think we've already seen it. So I think people were sort of maybe thinking that the potential deregulation or and this is probably more so on the crypto side in ETFs, frankly, what the new administration will bring. But when it comes to single stock ETFs, options income ETFs, the industry at large hasn't waited for there to be a turnover in January 20th.
And it seemed that way, from an outsider's perspective, it sure looks that way. Over just the past 4 or 5 years, there's been a tremendous amount of growth still, like there has been for decades now, for ETFs. So is it just crypto that was kind of getting picked on? Like most things were getting approved, no problem, but the crypto stuff was kind of being scrutinized a bit more, it seems.
Yeah, Steve, I think that's the right way to think about it. Is that so? Because of the primarily the and this is a conversation you could have a whole day about, right? Yeah. Some of the infight. One, I'd say the full Heisman for a long time on anything crypto related, and that obviously manifests itself with the sort of fight around Bitcoin ETFs. And then now we've seen some filings. Some have been pulled for other coins. But when it comes to, I'd say, sort of different derivations of equities, whether those are baskets or whether those are single stocks, there hasn't been. We haven't waited at large.
Yeah.
Roundhill has the first, and to my knowledge, only Magnificent 7 ETF.
That's what I wanted to go. Throw it up. Throw the chart up.
Yeah, throw the chart up. My question is about, like, we were kind of joking this week about Broadcom being added to that.
Oh, come on. You're going to go right to that?
Fine.
I love it. We're already getting into the nitty gritty, right? So I thought we talked about the chart, but all good, Spencer.
I don't disagree, but first, shout out. I don't know if there's been any niche fund that's trended as well as Mag 7 lately, particularly in the month of December. This one is literally going in one direction while the rest of the market is going in another direction. So Mag 7, new all-time highs, also new relative highs. Still the best game in town, these stocks.
Yeah, I'll just talk briefly about the structure of Magnificent 7 ETF. I mean, it's quite simple, and that's sort of the beauty of the product, right? Is that, it is to date the only ETF that provides that precise exposure to the Magnificent 7 stocks.
And is it cap weighted, Dave?
So we actually equal weight it on a quarterly basis, and that has really paid off.
I like that.
And so, now you have the benefit of Tesla. Obviously, for much of the year, you have the benefit of NVIDIA to some extent, to Meta as that sort of began to pick up over the summer. And because we have that sort of natural equal weighting, you capture these market generals, which have provided offense and I actually would say defense too, which is sort of interesting in this market in one easy basket. And what's interesting is, so we saw a incredible, increase in assets and trading volume in the ETF. I'd say in that sort of run up to the July pullback. Obviously, there was a long period of consolidation. We saw that really, textbook breakout that we're exhibiting here now and really experiencing with essentially all-time highs after all-time highs. And what we've now seen is another sort of influx of capital into the fund as people have come to see the mags as sort of really market bellwethers, and in some ways an index in and of itself. Even if you look at the comparison since the election versus the Nasdaq 100 or the S&P 500, huge outperformance. And now what's been really exciting to me, while it's still sort of, I'd say, modest in the grand scheme, we have seen a real uptick in options volume. And again, still got some ways to go there to kind of have the liquidity of some of the major kind of capital markets type ETFs. But we're starting to see it, which has been hugely encouraging.
So when did you launch it? And mid 2023, first quarter 2023 you launched?
Correct. Yeah, April 23.
So just looking at the performance, I would imagine this has been a pretty big success. Like what is the AUM grown to? In other words, if you make a fund that outperforms like this, do you get the AUM growth?
Well, I'd say it's not always, right? So there's certainly been ETFs that I've involved with or just seen across the market that have these, exceptional performance runs. Maybe cannabis is a great example, right? So there's periods where cannabis ETFs or cannabis stocks up as a group over 100% over a week time period or a 2-week time period. And then we see the collapse, right, in their performance and then the assets of the ETF. So you kind of need a couple things, right? Performance is a huge help because it gets people interested. But then you do need to see sort of, is it usable sort of in a way that has, I'd say, breadth to the community. And so what's really cool about the Magnificent Seven ETF is that, folks who focus on the charts, like you all, have really kind of, I'd say, latched onto it in a great way, because it represents these seven names, which are the market bellwethers.
Yeah.
And you can now that we have the liquidity, it trades pretty smoothly throughout the day, so you can do pretty robust analysis on it. But we also have a community of folks, particularly who came in that sort of July swoon, who are more fundamental long-term investors, who were historically just looking at traditional sectors, so comm services, tech, what have you, versus your cyclicals, financials, energy. They've come in and they're using this as a tool in their portfolios to make long-term asset allocation decisions. So products that have the potential to have kind of what I'd say breadth of users, and then plus the performance, is when you get a real winner. And we are at all-time highs in Mag's assets, around a little under 1.6 billion today. Really because of that.
No, this one's great. This one definitely gets my stamp of approval. I mean, what a great way to just buy the basket. I love that it's equal weighted. This is one of the best themes out there. You don't have to go buy 7 stocks. You also don't have to worry about moving in and out of 7 stocks, because the rotation among the Mag 7s, I mean, you saw it with Tesla over the past, month since the election. Now NVIDIA is the one that's not working. They always catch up. So it's one of those things where I think you just buy the basket. Throw up the Broadcom chart and go ahead and ask your question, Spencer. Because
I guess the question is very simply, what is your criteria for adding or removing the stock from this group?
Broadcom is now over $1 trillion in the conversation with the Mag 7s. How do we get Broadcom some respect out here, Dave?
So I think it's a very legit. I was joking with you, but it's a very legitimate question, right? So earlier this year we were getting tons of inquiries about kicking out Tesla, right? and some people were saying, put in Eli Lilly, right? Because it was definitely a top 10 market cap. That would have been a horrible decision, and I think probably people would have hated it. Now
that's incredible sentiment data, though, that you're getting.
Correct, which is why we love hearing from investors, right?
Wow.
So even if we don't necessarily in that case take everyone's view, because generally the way we think about this portfolio is pretty simple, right? If the Magnificent Seven were to, I'd say, over a legitimate time period, become the Magnificent Eight or something of that nature, we would seriously have to evaluate, right? Is this representing this basket of stocks?
Yeah.
Broadcom is making a case. I'm not going to deny that. It also fits, I think, more consistently than throwing in an Eli Lilly, or if you were just looking at the NASDAQ or Costco, right? Nothing wrong with Costco.
No, it ruins the theme. You're right.
It ruins the theme. Exactly.
Mega cap growth, the biggest, baddest tech companies in the world. Like Broadcom works. I don't think a drug maker or a big box store really work though.
Correct. So this is a name, if we were to see kind of consistency and how it kind of trades with the group for some time, then that would make a case that we'd have to take a harder look. But to your point, when you get thrown things that just don't fit the theme, because outside of their size, that's where we're gonna probably not necessarily go to the whims of what current I'd say 3-week sentiment is.
All right, so there you have it, Broadcom. Dave's saying there's a chance. No, I love it. That's awesome. I like how you guys, don't have these hard and fast rules, and you kind of you can use your brains and make these decisions yourself. I think that's fantastic. Yeah. Go to the drag now, because this to me is similar. I think this is just fantastic. I did not know this existed. I was writing a report the other day. I think, Dave, you saw it. Basically, how to start investing in China, right? If this is a new bull market in China, how do we get going? How do we get started? And I said, how better to do it? The way I've been doing it is trying to buy into these accumulation patterns in what I consider the Magnificent Seven, or the biggest, baddest tech companies over in China. You have a fund that basically does this, no?
Yeah, no, that's exactly right. And so I will firmly admit there's, for any successful probably endeavor in life, particularly when it comes to ETFs, there's some skill to create it and to identify the theme. but there's some luck from a timing standpoint, right? And so we got pretty lucky with when we actually introduced China Dragons.
Yeah.
We did some work. So when the Magnificent Seven was first sort of accumulating assets and gaining interest, we did some work to say, hey, are there any other markets around the globe that exhibit kind of similar behavior where there's clear leaders, not from an index concentration standpoint, but really when I say leaders, it's from above and beyond their market cap, their liquidity. In the case of the Magnificent Seven, and this actually applies to the China Dragons too, which I like, is their profit growth, their revenue growth, right? Hands in a way. They're in a league of their own, and the Chinese equity market actually is structured. There's obviously a lot of nuances when it comes to the micro market structure, but again, if I just look at the companies themselves broadly, the China Dragons really are very consistent to the Magnificent Seven in the ETF. There was some talk a few years about that in Europe with the so-called granola stocks. I've heard things about the Seven Samurai in Japan.
That's boring.
But you hit the nail on the head. If it becomes interesting, it could be a great opportunity. What China, the big difference, obviously, in your point, look at this chart. You could, if we were looking at the Mags one before, I'm not a CMT, but pretty different. So I don't know if you need to spend a lot of time studying technicals to see that. Sentiment's horrible and in China, and it got I'd say a pretty material boost when the potential for stimulus was coming.
Yep.
It's been disappointing. But if you look at the companies themselves, they have super robust business models, and many of them have huge moats. And so we created the China Dragon, similar structure. In this case, based on the way we do the screening, we identified 9 names in the portfolio today. So it's Tencent, PDD, Alibaba, Meituan, BYD, Xiaomi, JD, Baidu, and NetEase. And so, again, it avoids the other thing I really like about China that you said a moment ago is that if you're going to start investing there, unless you sort of have a super informed opinion, and I'm not sure exactly how many people can say that about the Chinese equity market these days, you probably want to avoid the tail of names that maybe are state-owned enterprises, have some connection, or on some potential sanction list, especially with the concerns about China under the Trump administration. These names can give you that exposure, give you that beta, but are also just not going to be dragged down by some of the junk that's in that index.
Things get sketchy over there when you go down the cap scale. And I don't think, you alluded to it earlier, I don't think there's any other country in the world that is similar to America in the way China is. They have these just absolutely, behemoth, monopolistic style tech giants. And
wait a minute. What about America, as Dave said, right?
I said China's the only country that's really like America in that way, where they have these massive tech giants who just dominate. They dominate their industries. They have more money than anybody. Like David alluded to, the profit growth, the revenue growth. So why not start there, at least, with like anchor positions in a portfolio? Throw up the Fang High, because we don't have much price history yet in the drag, but we made a custom index, which is, it's really similar. Dave, are you equal weighting yours?
Yeah, so we do the same thing. So we take those names, equal weight them quarterly, so that one stock doesn't have that influence. And like we've seen with Mags, it's paid off sort of to take the profits and sort of redistribute the weights, and then you can get the benefit that we're seeing out of Tesla now.
I love the equal weighting. But if you zoom out, basically what we did here, we built a basket which is very similar. It's slightly different. We didn't throw in the NetEase. We talked about the NetEase and the Meituan, and there's one more that we left out. And we wanted to make it 7, so it was similar to the Mag 7. We're having fun. But look at this. The point is, the biggest, best companies in China, their version of the Magnificent 7, if you added the others that Dave has in drag, it would not look much different, I promise you. This is a primary trend reversal, right? Maybe it hasn't confirmed yet that it's completed and the path of least resistance is higher, but you could see that 200-day moving average curling up beneath price. You could see the bullish momentum regime. We keep getting overbought, and it's coming out of a really pretty base. So this is what's going on in China. This is early inning trend reversal stuff.
Yeah, and the other thing, look, the Chinese equity market and China in general, a lot of strong opinions, can get kind of political pretty quickly. But, at least how I always was trained thinking about the world is, kind of like stocks are stocks. If there's opportunities to take a bullish position, or if you want to take a bearish position, ETFs are a great way of doing that. So you don't necessarily need to, put your political views on there. Obviously, that's a loaded statement, but we have this long base, and now we're kind of seeing, to your right, superimposing the chart, this rising uptrend. If we were to see the stimulus, and if we were to see these stocks certainly are, I think well poised to potentially break out, just like we saw early in the year. It's going to be volatile, but there's such negative sentiment that in cases like this, anytime you see really, I'd say, a smidge of good news, you can see, huge moves to the upside.
Dave, you're spot on. The two S's really catch my attention, right? The sentiment stands out and the stimulus. These are two things. The sentiment around China for years now has been, you can't own these stocks. Like, don't even pay attention to them. They don't exist, right? Like,
correct.
Absolutely washed out sentiment. And then on top of it, the government's raining helicopter money down. Stimulus. So this is two things that we see at bottoms all the time. Now we're just looking for a price to confirm. But this is a great setup. Yeah, drop the posts in, Alfonso. And then Dave, you've been so generous with your time. Yeah, Alfonso could drop the Shanghai post where we kind of talk about our bullish thesis on China. And Dave, you've been so generous with your time. Before we let you go, what are there any other hot themes right now that ETF managers are kind of talking about that we didn't talk about today? Like, what else? Anything else in the works? Any other like theme groups or niche groups that you're looking at from a fund perspective?
Yeah, so it's interesting. I think the story of ETFs in 2024 was really, I think, about amplified exposure, right? So that really comes with leverage products, single stock leverage. Then I think the enduring theme being the Magnificent Seven. We had GLP-1s earlier this year, kind of quantum's coming up, but at the end of the day, people come back to the mags. And then the income space, right? So that's been fascinating to us. We participate in that with covered call ETFs that trade 0DT options. So it's almost like this bifurcation, right? People want amplified exposure, but they also want income. Maybe that's one of the reasons why cash balances still remain so high, is this ability to have sort of kind of earn along the way and then have use that opportunity to maybe reinvest in different trades. When it comes to sort of themes, the quantum's kind of coming up now. I think what we're seeing is, we've heard a lot of chatter kind of about the Trump administration now that we're building the cabinet and the like, is, what could that kind of start translating into? A theme that comes to mind that we had a lot of excitement about, in the beginning of the Biden administration, was something like hydrogen. We know that those stocks flamed out pretty hard. So that now the kind of hard work comes into play to say, hey, what's really actually going to have some legs behind it.
Is there, first of all, interesting about the covered call situation, because these income strategies have been around and been funds for a while, right? But maybe they're just now gaining more traction.
Yeah. Well, it's sort of, they have been around for a while. And I think to date, I think prior to sort of the introduction of some of the newer type of strategies, they were relatively boring, right? So they did a monthly covered call or a quarterly covered call, and really it was about lower volatility exposure with some income. What we're doing, and some others to different ways too, is we're doing a daily covered call. So one has the potential to produce much higher levels of income than you could historically. And because what we do in our 0DT option strategies, we only do that covered call during the market hours. So you have uncapped overnight exposure, something which is called the night effect. And that's actually really worked in 2024, right? So most of the returns have come from the overnight session. And so actually capping upside, using that to earn options premium during the day has paid off.
That's interesting. That's awesome. Spencer, unless you have anything else, Dave, this has been a pleasure.
It's been awesome.
For coming on.
Hey, thanks for having me, guys. It's a pleasure.
Thank you, Dave.
Thank you.
So that's interesting. We're working on some really cool stuff over there. Listen, I'm a fan. I'm a fan of the drag. And I'm a fan of the mags. Big fan.
Yeah, you can learn a lot by talking to these ETF providers, right? You can learn a lot about sentiment, as we did.
How cool is that? That he's paying attention and getting these emails, and people are saying kick Tesla out of the mags. Oh, that's good. That is I wish I had that data. I wish I had his data.
That's good. The one thing he may have touched on this, but maybe we could have asked him a little more about the logic of doing the mags equal weight versus market cap weighted. But yeah, I mean, you can't argue with the results, right?
Because here's the thing, right? Wouldn't it be too similar to the MGK and the NASDAQ 100 if they were just going to come out and cap weight it? Because, guys, let's be honest, NASDAQ 100 is what, 60% mags?
That's a good point.
So by equal weighting it, it's also a different, a more of a diversified offering from what's already out there.
That's true. That's true.
And when you equal weight it, Spencer, this isn't an index of 100 stocks where the bottom 50 might be, far less coveted than the top 50. These are the ones that they chase, all of them, and at different times. And you've seen the rotation through the sevens, right? But like to try and pick the best one, say, oh, the best one is naturally going to be the biggest.
Yeah.
Every year is going to be different. Maybe it's Google, maybe it's Amazon. I really like the idea of keeping it equal. I do. I'm going to run and grab some coffee. Is somebody coming on?
We got Mary in the house. Is that true? We do.
No Fonz today?
Fonz, I mean, he's always here. Fonz is, he never goes away. He's here, but I don't think he's coming on today, unless he wants to. Real fast, 9:35, markets opened. Anything jumping out to me right off the bat on the opening bell? Let's look at the movers here. Yeah.
Shout out Todd Sohn, the best Twitter troll. Nobody knows it though. Todd Sohn, the low-key troll. No, that was a great conversation. I really enjoyed that. So
I'm just looking here. Why is
oh yeah, I'm looking through my newsfeed too. Did we hit on any earnings or anything? So Nvidia is up here. Momentum mover. Microsoft purchases largest amount of Ion 2024 Gen AI computer chips. So Microsoft's doing deals out here with Nvidia. Is that what's bidden up?
Yeah, that essentially is. There was a long article, I forget where it was now, about Microsoft's AI strategy and how they are seemingly kind of falling behind. At least Google, right? Google and Apple.
Really?
I didn't read it, but
yeah. Microsoft falling behind, huh? I'll fade that narrative all day.
No, also aren't they an investor in ChatGPT? Like how far behind could they really be? Right?
No, that's a great point. Yeah, they have the biggest investment of anybody in ChatGPT, don't
right?
They?
So like, how far behind could they really be if they have that in their back pocket? I don't know.
If you guys watch the show regularly, you've heard us rant about this. But Spencer, that is the kind of rhetoric that you fade every time. Whenever these Mag 7s are down, buy them. Whenever people are telling you they missed it, or the new iPhone people don't want it, or the this, the that, or what is it? Microsoft is losing ground. Buy that.
So far, that's been the case. So far, it's been the case for 15 years. Right?
It'll eventually be wrong, and one of them will turn into an Intel in the future.
Yeah,
right.
Yeah,
that will happen. But it hasn't.
And we thought maybe Netflix was the
they're doing great still.
I don't know, the redheaded stepchild of that group, but even Netflix came back. So don't know.
Throw up the Nvidia chart just one last time because I feel this so strongly in my bones. Okay, this is a raging bull market right now. Breadth is expanding. We have had 2 really, really bad weeks, right, where the broader market is correcting. Breadth giving some back, right? But we just thrusted the election. We had momentum thrust even back this summer. The bull market is very much intact. Do you want to make the bet that the MVP of this bull market, the single best stock, the poster child of this bull market, is going to complete a top and roll over? We want to fade these patterns all day long, especially in what I consider the best stock in the market, the best fundamental growth story. It's not even expensive here. It's absolutely insane to think that we're going to lose Nvidia when absolutely nothing is going wrong. Things are only going well and getting better and better for Nvidia, at least for now. To think we're going to lose this stock right now, at the stage we're at in this bull market, I think is absolutely crazy. I'm so long this pattern. You got your hook, you got your shake, and now we're going. Now you're getting your spring out of here. So this is actually going exactly how we wanted it to. We'll continue to follow up, but I think this is the number one. This is like easy money into year-end trade. I like this from a tactical perspective more than anything.
Always important to keep in mind if there's anything happening on the horizon from a event perspective. So thank you for mentioning that, Jack. Nvidia does have a big conference happening in a couple weeks. So not saying it's going to mean anything, but for a stock as in focus as Nvidia is, it pays attention. It's worth it to pay attention to when they have these events because the market is very sensitive to headlines as it relates to Nvidia. So especially if it's going to be down into it, right? If it's going to be up into it, then like okay, but if it's going to be down into it, we're going to care more about what they say. So
this is the shake and bake, Daniel. We also call it the scoop and score. This is a scoop and score. You trap the bears, you give them a shot, and you hook it higher. So this is actually quite beautiful the way this is working out. This is one they'll put in the textbooks in the future. I'll be right back, Spencer.
We'll put in the textbooks. All right. While Steve gets his coffee, before we bring on Mary, can we bring on the hot corner real fast? I'm not going to roll with the bumper funds, but can you just bring it up? I saw we had the Baker Bros in there today. It's been a hot second since we mentioned the Baker Bros on this show. They're not like the most active investors in the world, but they did up their stake here in Bicycle Therapeutics from 19.75 to 22.9%. This is just gives me an excuse to mention if you did not get the free Hot Corner Baker Brothers report that Steve and Alfonso and Sam and company put out last month. I just dropped the link in the chat. This is a free report all about the Baker Brothers, why we pay more attention to them than arguably anybody else when it comes to insider filings. They are the GOATs of biotech investing. And when they make a move, we listen. We follow. I don't say we follow them, but we definitely focus on that. Right? It's important. So this is a free report that we just again the link is in the chat. Kind of walking through some of their recent trades, what we think about them, and what you can do with them with this information. Right? So it's all about being actionable. So there it is in the chat. Check it out. Okay, hot corner done. Mary is here. Let's bring Mary on, and then we'll wrap up the show.
Did you know that the hot corner is Michael Batnick and Josh Brown's favorite thing that we do? Absolutely love it.
I did not know that. No,
it's good stuff.
All right, where's Mary?
Good morning, Spencer.
Whoa, very red day.
Very red.
Red
no,
shirt,
it's going to be
scarf.
green today.
I know.
Oh, it's holidays, and so I mean we're a week out from Christmas. So a week from today will be Christmas, and so we won't have a show. I won't be on, so I'm wearing my festive Christmas scarf, plaid.
That's true. The next 2 Wednesdays, we're not doing a show.
Yeah.
This is the last Wednesday for a minute. All right.
Yep.
Okay. So give me your year-end and 2025 market price targets. Go.
Oh, that's a little extreme. I don't have any. But with that said, throw up my NVIDIA chart. So I was buying semiconductors yesterday. Giddy up, let's go. Giddy up, giddy up, giddy up, let's go. Okay, so I have an anchored VWAP here from August. Came right down, basically kissed it. I was buying this yesterday, along with a bunch of other semiconductors. And now here this morning, we've gapped above kind of that area of what I have marked there as resistance, more or less. So just like Steve was saying, the scoop and the score, the failed move, come fast moves, all those things that we say. In addition to NVIDIA, I also was buying, Steve's going to scream at me for this one, AMD. So this is another chart I brought along today. AMD, I've got
I'm with
another.
you. I'm in it with
right?
you. This is just higher beta. But
Exactly.
I think if NVIDIA works, I think AMD works too.
Exactly.
And probably even works better, maybe.
I'm hoping so. Yeah. So, I mean, again, a VWAP
Look at
drop
this.
back.
Fantastic.
Yep. So back from a few years ago, this has been, for the last several years, the place to buy. And so the sentiment I'm seeing all over Twitter, it's all,
Yes.
and I've even seen it in our own chat. AMD, what a
They're
dog,
making fun
what
of
a
this
loser.
stock. There are
I know.
memes about AMD being like left in the corner.
Yeah, exactly. So I was buying it yesterday, along with Micron, along with LRCX. Just a lot of these semiconductor stocks just look like a great buying opportunity, great risk reward, because we're going to know very quickly if we're wrong. But it's a bull market. How can these not? I mean, how could these tops be tops?
For me, it's as simple as this. If you're not making this trade, do you think the bull market's over?
Right.
So we lose NVIDIA on an absolute basis, and we probably lose semiconductors' relative trend.
For sure.
What kind of market are we in?
Not a bullish one.
Like, are we selling everything in that environment? That's not the bet I'm making when we look at breadth, when we look at, just the momentum that we've seen off of the election response or reaction. This bull market is in very good health on, a broad measure of things. And to bet that the single best stock this entire cycle is going to roll over and its whole group is going to go with it, I think that's tough. And I think if you think that these are going to be valid tops, that is the bet that you have to be comfortable making.
Yep, exactly. So yeah, I was scooping up the semis yesterday, and then I brought a couple of other charts that have my attention. So Upstart, this is one that actually has legitimately been on my do not trade list for a while, and I just got burned by this one a couple of different times in, I think, 21, 22. During that whole decline, I was trying to catch it, and it just kept going down. But this is the same pattern over and over, and I feel like every time I come on the show every week, I've got this same base, and it keeps working. And so I got involved in Upstart, much to my chagrin, even though it was on the do not trade ever again list. I couldn't pass up the base. So plus you've got great the RSI, the bullish divergence in the RSI. This is a weekly chart. And, if it's the bull market, this should be going along with everything else. And it falls kind of into that whole theme of the ARKY stuff and the speculative growth and all those things. So I know you guys have been covering that a lot here lately. And again, I love a good base.
I was anticipating some give back from the speculative growth team. That would have been normal, right? A little digestion, a little downward digestion, right? A little bit of corrective action here because they've been working well since before the election, right? The speculative growth stuff.
Yep.
But the resilience this month from these stocks like Upstart and Affirm. Drop the post on JC's blog about Affirm because I'm with you, Mary. These charts look as good as anything. They're fresh reversals. They tell me that these stocks help you buy now and pay later. But when I look at the stock charts, I'm thinking I'm going to buy them now and get paid.
Get paid later. Ooh, I like that. Get paid later. Woo. Strazza on fire today. Watch out.
Throw up the Affirm before, Mary, I think you have more, but throw up the Affirm because this is their closest comp to Upstart, another BNPL. Same base to me. High and tight flag. Do we have those charts? If we have them, throw them up. Otherwise, we can keep going here.
Yeah, there's so many of these right now. And, again,
Fintech.
It comes back down. What's that?
Fintech in general is just trending so well.
Yep, exactly. One other chart that I have now, this one, here's the Affirm. You can talk about this one.
Yeah, just look, it gets even better. It's not just, an absolute trend reversal, but the leadership, right? We could anticipate future leadership from these stocks because you're also getting an almost identical primary trend reversal relative to the broader market. So when we get that, it doesn't just tell us, okay, this stock is ready to start trending higher. Path of least resistance is up. It tells us we could expect it to keep outperforming in the future. And we love that. So, all right, what else you got?
Last chart that I brought today. Now this one, hesitant to share, but it's one of our favorite setups, the scoop and score, the whoopsie move array. So this is a solar stock. This one I've already been burned. I know. Yeah. I've already been burned on this one. Because I was waiting for that breakout above kind of that consolidation zone. And I got in. And then I got burned. I got out. But now.
Yeah.
So we broke down. We broke below those former lows. And then yesterday we were up 6%. Today we're up another 3%. I mean, the weekly candle now that's it's looking like is going to be a hammer type candle. If we get back in that zone, or even just reclaiming, those former lows, this has my interest again. And I haven't put the trade on yet. I'm watching it just to kind of probably wait to see how, we've got the Fed today and all the other things. I might wait to see how the week closes on this particular candle before I get involved. But this is from our short squeeze list, which is one of my favorite places to go fishing. So obviously know what you're trading with this one if you do decide to get involved. But it's again, that's whoopsie move, the scoop and score. And maybe we get some upside resolution to this one too in a quick manner.
Well, Mary, you're braver than me at times, because look, I've been trying to make money on solar stocks, albeit unsuccessfully so far, and I got stopped out of I did a half of my array on Monday, so I'll get back in with you if this hook is real. I'll get back in with you. I'll add that half back today. But these solar stocks, oh my God, it does have such a juicy short interest. And look at this. I mean, we continue to see this quarter, really more than anything, chart patterns that look like this. Shout out Zoom, Teladoc, Peloton, right?
Peloton.
All of those dirtbag laggard stocks, right, for so long, not breaking their prior cycle lows, digging in at levels like this. So I'm with you. I would definitely not be short in this one.
No. So that's what I got today.
Spencer, fast market. Let's run some recess and get out of here.
I've got some stock to buy. Yeah.
Let's do it.
Let's go.
What do you got?
Well, so Christmas theme, because like I said, I'm not going to see you guys until after the new year. I am baking Christmas cookies here at home, of course, because I've got kids. So those are the peanut butter blossoms with the Hershey Kiss. Now, Spencer, we talked about these last year. I can't remember. Are you eating peanuts this year, or are they still on the naughty list?
I have had those cookies before. I learned the hard way that there's peanut butter in that. I didn't know that. No one told me. Whoops.
Whoopsie. EpiPen to the rescue.
Yeah.
Yep. So those are the peanut butter blossoms. Now the other ones I don't even know what the name of these are. My kids love these. We call them just holly wreath cookies. They're just corn flakes. They're basically like Rice Krispie treats with just
they're so pretty.
Crap ton of green food coloring. This goes in nice and comes out not nice. I'll just put it that way. But they've got the little cinnamon hard candies on top, and they're just a gooey, chewy, yummy, tasty.
I thought it was kale.
No, gosh, the Christmas cookies. These are Christmas cookies. So next week we're doing like Christmas Eve. We do the cut sugar cookies with the special shapes and the frosting. I'm making fudge, and so I love Christmas because it's all the baking, and that's what we do here in the Midwest is food. So
the peanut butter ones, a favorite of my mom's too, and also one of my personal favorites. Hard to beat, really.
Yep. I was curious if anyone else in the chat has ever had the green, because I don't come across these very often. The green Christmas cookies,
never
the holly wreath cookies. Yeah. So anyway, give me a shout out or shoot me an email if you do, because I'd love to know if anyone else that has that tradition.
We're 7 days away.
7.
Wow.
Oh.
Yeah. So I don't think I've told you. Well, I think Spencer knows. So Christmas actually is also my birthday. So
is it?
It is, yeah.
That's so cool. Wow.
Another year around the sun. Yay me.
Does everybody just get you one present then?
My birthday is basically overlooked because I have children.
Yeah.
So
Right.
I told Spencer I'm taking the day off on the 26th because the 26th is going to be Mom's birthday where I get pampered, because it's the busiest, hardest day of the year for a mom, because you're doing all the things for the kids and making everything super special and, making it magical. And so it's a really hard day to have a birthday. As a kid, it was fine.
Imagine. Yeah. Wow. Well, poor Mary.
That's okay. No, not at all. Not at all.
Spencer, I don't have anything.
No, I got nothing. My only recess was 2:00 today. We've got FOMC. 2:30 today is Steve's Breakout Multiplier Mastermind, and then 2:00 tomorrow is Sean is doing a live event right here on the site. He's going to kind of walk through what he sees as the different scenarios for market environments next year and his approach to trading each of them with options. This is a totally free event. Tomorrow at 2:00. I just put the link in the chat. You can go to that link, enter your email. You'll get the watch link for the stream tomorrow. Kind of Sean basically kind of walking through from an options trader's point of view how he will approach various market environments next year, whether the bull market stays the same, whether it gets a little bit more selective, whether we have a bear market, whether we have a sideways market, whatever happens. He's not a prognosticator. He doesn't know, but what he does know is he has a strategy for every environment. So that's what tomorrow is going to be. So the link is in the chat. Check it out there. We'll talk more about that tomorrow when Sean is on the show. But that's my recess. So
I'm looking forward to this afternoon. Sean and I are having a conversation with market wizard Tom Basso.
Ooh,
nice.
very nice.
All right, what's today? Today's Wednesday. What do we have? Hot quarter members, you have your thing. We mentioned the break and multiplier. And that's what we got. So thank you to Mary for hanging out. Dave Mazza, always a pleasure to talk to him. Thank you, chat, for hanging out with me. Appreciate that. All the comments, all the likes. Hey, hit the like button, please. It does help us. It really does. More likes.
I heard everybody.
And hey, while you're at it, subscribe to our channel. I don't say that enough. Like and subscribe, y'all. Like and subscribe. Follow us on all the socials. You can do that here. There they are up on the screen. Do that. And we'll see you guys tomorrow. All right.
Adios.
Happy holidays, everyone.
I can't take no loss.